The past 12 months have arguably been the most important ever in the history of sovereign debt restructurings. It started with the biggest ever government default and restructuring in Greece, and a series of unrelated court cases from New York to London could in extremis refashion global finance. Today, we're lucky to have with us Lee Buccheit, a partner at Clearly Gottlieb and an advisor to virtually every country that has found itself in financial distress, including Greece. Well, Lee, thank you so much for being here today. It's a complete privilege. So many things to discuss. I mean, one of the first things I wanted to ask, what nickname do you prefer? The philosopher king of sovereign debt? The fairy godfather, I think, was also one of them.
Well, I think something that is not too pejorative would be preferred.
Oh, yes, well, I've heard some worse names from some hedge funds. If we start off in Europe, obviously you were an advisor to Greece on its debt restructuring. What do you think about how Europe has handled its problems in the debt space over the past couple of years, really?
Viewed historically, Robin, it is astonishing what they've done. They have elected to lend, except in the belated Greek restructuring, they've elected in every case to lend the debtor countries the money they needed to repay in full and on time all of their existing creditors. In the 1980s, when we had the last truly contagious regional debt crisis, exactly the opposite policy was followed by the official sector. They told the existing creditors, you stretch out for as long as may be necessary. You don't have to take a loss right away, just stretch it out, because one of two things must be true. At some point in that future, either the problem goes away, in which case all is well, or it doesn't, and a debt restructuring, a real one, a more severe one, is required, and then that axe falls on your neck, the people who lent the money, rather than my taxpayers' neck. So what they've done in Europe is astonishing.
I mean, do you think they should have been tougher? They should have been restructuring quicker and harder in some of these countries?
I think so. They perhaps not harder, but quicker. The view I think they took in the beginning was this is an acute crisis, not a chronic one, that this shadow will pass, and we don't need to take any steps that have a sense of permanence about them. We don't want to, because it would signal we do think the crisis is longer lasting than we hope it is. Well, we're in the fourth year of it now, and I don't think it shows much sign of abating anytime soon. So yes is the answer. Turn the clock back to early 2010. If they knew then what they know now, would they have done something different? I expect they would have.
Obviously, Greece has had a humongous debt restructuring, and we've had some lengthening of the official maturities. I mean, does Greece still need more debt relief to be sustainable?
Greece is still carrying an enormous debt load. The debt restructuring of last year wrote off 100 billion euros, a chunky number, but the country is still carrying a very high debt load. And if it is to return to voluntary market access, it will undoubtedly have to address that debt stock. The debt stock is now, however, in the hands of the official sector. That was the implication of the policy decision they took in May of 2010, that they would lend Greece the money to repay its debt, and for 2 years they did that. So the official sector now owns most of that debt stock.
There's been talk now of some sort of sovereign debt restructuring mechanism. There's a chapter around a bankruptcy process almost for countries under the auspices of the IMF. I mean, do you think that is going to happen?
It is still, I think, a tall order. It has a lot of implications. It would require an awful lot of winning of hearts and minds among various important countries. Some more modified, minimalist version of it, however, might come out of this. We'll see.
Yeah. Well, winning hearts and minds in sovereign debt markets for a few decades now. Lee, thank you so much for being here with us today.
Thank you, Robin.